Welcome back. Let's get into that market picture now. And Asian stocks mostly rose today. A lot of that recovering from previous days pounding after Donald Trump said that the China-US trade talks would perhaps resume soon, though the president's sharp changes in tone are keeping investors on edge. Regional equities did, however, tank, and the yuan plunged on Monday in response to news at the weekend that Washington would hike tariffs on more than $500 billion of Chinese imports after Beijing unveiled levies on tens of billions of dollars of U.S. goods as well. However, investors who had run for the hills in the morning returned in later trade after he said in a G7 news conference in France that negotiations would resume very soon, and Beijing had telephoned saying it wanted to strike a deal. Tokyo's Nikkei did manage to move up, though, by the close of trade today. 1% higher for the Nikkei as well, 20,456 points. Unfortunately, the Hang Seng in Hong Kong not doing as well as one would have thought, just inching lower, 0.1% fall on that front, while the Shanghai Composite in China is up on the day. That moved up 1.4%. Let's move things over now to the United States, where Wall Street has recovered a chunk of last week's sharp losses, with investors now finding some comfort in President Donald Trump's rosy talk of a China trade deal. During an economic summit then in France, the president reversed himself yet again, telling reporters that the United States and China were set to resume efforts to resolve their year-long trade war, despite some contradiction from Beijing. The conflict did suffer major escalations last week when Trump said the U.S. did not need a deal, raising tariffs on Chinese goods and saying that he was ordering U.S. companies to leave the country. The benchmark Dow Jones Industrial gained just over 1% to end the session, while the broader S&P 500 was 1.1% higher at close. The tech-heavy Nasdaq jumped 1.3%, 7,853 points. Let's move things over to Europe now, where, of course, sentiment has been just around that G7 summit, which was held in Biarritz, of course, in France. Just how has that played into the hands of the market has certainly been of interest. A bit of a mixed picture as well, following exactly how things were yesterday. Down for the FTSE 100 out in London, while the CAC 40 and the DAX out in Germany and France have certainly performed a whole lot better. On the local front, it's slightly down today for the JSE All Share, but only marginally, following on yesterday's drop as well. The sentiment may have turned positive across the world, but there are a few issues and a few scares around just what might happen when it comes to that China-US trade war. On the resources front then, the gold stocks have certainly been of keen interest of late. That has gone down today, while the remainder of the resource shares have certainly headed higher. BHP Billiton doing very well in Australia in early trade this morning, so picking up the resource counter on the local front as well. Onto your commodities picture, and as I said, the safe haven of gold has remained intact thus far, still above that 1,500 level, $1,530 a fine ounce. Then for the yellow metal there, as it sees some positivity. The white metal still hovering above that 850 mark, then 861 for now. Demand certainly still petering through and getting that price up a little higher. Oil below that $60 a barrel mark. Demand has certainly been the question at hand here. The global economy perhaps suffering, which may, of course, affect that oil price just a little bit more. And in your currency picture, while the rand just remains above that 15 rand against the US dollar mark, slightly positive today, having traded around 15.30 to kick things off, but now 15.25. 18.74 a British pound, and the euro will set you back 16 rand and 93 cents. Let's head on over now to the Johannesburg Stock Exchange, where our very own Kabelo Tola is joining us. He's from FNB Wealth and Investment. Kabelo, thank you so much for the time. Appreciate it. Then it certainly has been an interesting market picture. One day we're up, one day we're down. That trade situation with China seems to be the crux of the message. Do we trust Donald Trump this time around?
Well, you hit the nail on the head there. That's really the crux of the matter. We need to get a breakthrough in terms of the trade deals. The G7 happened and there's a lot on the table, but I think probably the most pressing issue is that trade deal, because that's impacting sentiment, that's impacting expectation going forward. And the markets, our local markets, as you can see, not too convinced that all of the concerns are being addressed and there's a resolution around the corner.
Yeah, one might fear then that if there isn't a resolution necessarily around the corner, then where do we sit? Did the G7 achieve anything then? Did they actually give any element of help to the scenario with regards to trade, or did Donald Trump just run ragged and rampant? So what does that do then for market picture? Is there any certainty?
Well, that's the thing. As you rightly say, certainty drives the markets, and without that, we're going to have periods of volatility such as you're seeing at the moment. One thing, for instance, is the gold price has firmly broken the 1,500 mark, and really that's a sign of uncertainty and clients and investors basically taking a foot back and saying, you know what, let me park in gold. I'm not expecting interest rates to, or rather I'm not expecting inflation to come in on the upside, meaning there's going to be subdued growth. And you're going to see different readings from Asia. You're going to see different readings from the JSE here. And because the world and the markets are so intertwined, what happens at the G7 is going to have an impact in Africa, in Asia, in the Middle East, etc.
Do you think there's going to be a sustained stay above that 1,500 mark, though, for the gold price? Because one would say it's safe haven status, maybe it for now, but is that sort of a secured status? We saw back in 2009 that wasn't necessarily the case.
It's an interesting one because we had historically seen the dollar being used as a proxy in terms of a safe haven. And of late, that hasn't been the case. Instead, we've seen U.S. treasuries being picked up quite aggressively, and we've seen the gold price hovering around that 1,500 mark. I think we're going to see, as long as the rhetoric continues to remain as is, a sustained move above the 1,500. The other thing to look out for is that the oil price, despite sort of the supply side issues, the demand side is not as aggressive or as buoyant as we'd like. And basically that means economies are going to slow down. Demand for the oil that's produced in the world is going to slow down. And hence you're seeing it struggle at that $60 a barrel mark.
Yeah, and what has been quite interesting also with that oil price is the fact that the OPEC countries no longer make up 35% of oil production in the world. It's now around 30%, and that just keeps on seemingly decreasing, and it really tells you this change of the world and global order, I suppose. Does that oil price ever breach 60 and stay above that mark, or is 59, 58, or high 50s the status quo now?
Look, we'd probably be looking at a region of 55, possibly up on the upside up to about 62. One thing as we've been talking is that demand is key right now. Now the supply side has been hampered by a lot of uncertainties. The group not finding consensus in terms of the quantum of the cuts that need to happen. So you know, I think the issues with the oil price predominantly lie on the demand side. Look, with oil, such as with currencies, you need to be looking at a range. And I think comfortably into the next 12 months, remember in 12 months or thereabout, we're going to go into the U.S. elections, yep, which are a big factor in terms of the markets. So probably stick within the range, 55 all the way up to about $62 a barrel.
More weakness for the rand expected?
Well, with interest rates in negative territory in developed markets, I think there's demand for emerging market currencies. And to get exposure to South African equities and high-yielding bonds, you have to buy rand. So I think you could find sort of what you'd call the carry trade, where large investors in developed markets say, you know, we need to find some form of yield. We can't sit with money in the bank because it earns nothing.
Yeah.
So let's maybe look into some strong institutionally emerging markets, and I think South Africa certainly constitutes that. So it's a wait and see at the moment. I think we're still slightly weaker than where we should be. We've got attractive bonds. We've got you know, fairly high yielding stocks on our bourses. I think we could go below 15 at some point.
Undervalued is the sentiment there from Kabelo with regards to our currency. Hopefully we really do get to that level. Kabelo, appreciate it so much. Kabelo told us from FNB Wealth and Investment, they're helping us unpack that market picture live from the Johannesburg Stock Exchange. Now,